Welcome back to the channel, guys. I have a very special guest on the other end of the line here. It is David Lind, host of the David Lind Report. Good morning, good evening, mate. How are you going today?
It's good afternoon for me. I think I'm like 14 hours apart, but yeah. Thank
That's
you for
true.
introducing me as a very special guest. I feel very honored to be introduced as such. I'm just happy to be here, so thanks for having me.
You are a very special guest. You've interviewed some pretty amazing people
Yeah,
along your
such as
journey.
yourself. We just did a hit, so yeah.
That's right. It's over on David's channel. So obviously go and check his stuff out. The links will be in the video description. If you guys don't know who David is, he has interviewed so many people across the world in Bitcoin, in finance, in the gold space. Was a host and journalist for Kitco. Am I saying this right? Kitco News,
Yeah,
massive on
yeah.
YouTube. Yep, yep. So you've done a lot in your short career. Just step us through quickly, the 30 seconds, 60 seconds, what you've done in your past and, how you got to where you are here.
Graduated from finance in McGill. Wanted to work on Wall Street. Didn't work on Wall Street. Ended up working on in macro research shortly after school in a firm in Montreal, independent macroeconomics research firm. Worked there for 4.5 years as a macro researcher. I was a research assistant for several economists, and then I switched over to Kitco. They were looking for a producer at the time, and I was interested in more finance than journalism still, but I thought it would be a cool avenue to explore finance from the journalism perspective, writing questions about finance and economics and booking guests related to finance and economics in those fields. And of course, Kitco being a very commodities and gold focused company, I did a lot of research on gold as well. And so my first 2 years at the company was as a producer, helping to book guests and source questions and produce the show for the anchor at the time. When she left, they asked me to anchor some of the videos, and I guess they liked me, so they kept me. And I did that for 3 years. So I was still the producer, so I did both anchoring and producing. So it was a continuation of my job as a producer, just with the on-camera element. And about late last year, I decided to be an entrepreneur, go off on my own, and launch my own channel, which I did in early March. And so far, it's the David Lind Report is what it's called. So far, it's at about 77,000 subscribers. I've got over 4.8 million accumulated views. So it's grown a lot, and very happy to be on this journey and share with you my insights.
I mean, your show should really be called Up Only because that's all you've been doing is just going up only since you started. But
Nothing, as we've discussed with your interview, nothing goes up only. So I'm careful to use that term. I would be wary, but yes.
it's been going pretty good. But I guess the real interesting part, and we talked about this recently, that we will get into, but there might only be certain things you're allowed to share, is just the behind the scenes journey of being a journalist and a reporter and writing these
Right.
questions and the stuff that we see at face value as crypto or Bitcoin investors, stock investors, gold investors, the stuff that we're shown from the media, but what happens behind the scenes, like how these businesses come together and how does that news get presented to us, and what are the angles they're trying to take when we see this news. That was sort of the interesting stuff that I found when we were talking, so I want to get into that today. Plus I guess we'll start with the recent thing. You went to Bitcoin Miami, probably a good place to start. What was it like? What's happened? The turnout from this year compared to last year, and what do you see in terms of the trend based on what we're seeing at the moment?
Yeah, I didn't do any interviews there, so I went there to network, and from the conversations I've had, yeah, sentiment was not great compared to last year. Last year, it was not the height of the bull rally. It was already the Bitcoin price was already coming down, but there's always this sort of lag in sentiment. It reached an all-time high in late 2021, as you know, and then the last conference in the spring of 2022, there were still a lot of people, and this year there was, I don't know, I think there was like 10,000 as opposed to 30,000 last year, so a third of the attendance. It was shockingly quiet for the world's largest Bitcoin conference, and so that generally reflects the sentiment. Another reason I've heard, and I've asked this to people that I've talked to on the floor, is why it is that sentiment here is so low, where the attendance is so low. And the other reason is that there's really this divide between the Bitcoin maxis and the rest of the crypto market, and BTC Miami is really selling themselves and as this Bitcoin focused conference. And so the rest of the crypto community, if you want to call it that, they're just not, they weren't present. And you can see that in the presentations and some of the workshops. It was very much a Bitcoin focused conference, and there were some talk about AI and DeFi, but you would find more focus on those areas at other conferences, I find. And so, yeah, factor that in with the fact that some people still think we're in this spring, not quite to the start of Bitcoin summer yet. Yeah, generally not a big crowd in the Bitcoin space right now.
Was there any talk about introducing crypto into the discussions of Bitcoin Miami or the Bitcoin conference to expand it, or is it just purely going to be a Bitcoin event? Did you hear anything about that?
I don't think they I don't think they officially market themselves as a Bitcoin only event. It's just the people they attract and the
Mm.
presentations that they make, and the people that are there are a lot of them are Bitcoin maxis. And so no, there was no, from what I've heard, there was no official talk to introduce this and that, because that, there wasn't an official agenda to begin with. But I don't know. We'll have to speak to the organizers and see what happens next year. There were certainly a lot of developers working on Bitcoin, the layer twos and threes as well. Strike was there, Lightning as well. So yeah, very interesting conference.
I think Saylor was there as well, and you've had him on your show recently.
Yeah,
Ha-
he was there.
Has he said anything different to what he said over the last 3 years? He has that same script of 60 minutes where he goes through and lists everything that Bitcoin does and doesn't do. In the recent scripts that you've done
One
with
thing
him.
that has been okay. So my conversation with him, I had a two-parter, so you can check it out on my channel. The first part, we talked about his thesis for Bitcoin, which I think hasn't really changed, because the fundamentals of why you should buy Bitcoin as a form of money, I don't think that's changed over the last year and a half. But the new information that we did discuss is Bitcoin ordinals, which is a new protocol that launched this year. And with Bitcoin ordinals, you can inscribe information onto the Bitcoin base layer all the way down to 1 Satoshi, which is the smallest measurement of Bitcoin, smallest unit of measurement of Bitcoin. And with this, we've seen an increase in traffic and user activity on the Bitcoin base layer. And so the transaction fees on the base layer jumped to record highs, the highest it's been since 2021 for a brief period of time in the last couple of weeks. And that's really clogged up the Bitcoin base layer transaction volume. And so his argument was that the transaction costs aren't necessarily going to go down to its previous lows. Rather they're going to stay high, and this renaissance of developer activity on the base layer is going to stay. And so what's going to happen is we're going to see this explosion of Bitcoin layer twos and threes in development in response to this. And so we're going to see people transacting on layer twos like Strike and Lightning much more frequently than before. I think were his viewpoints. Yeah.
So it's potentially a narrative to look out for, just like we're seeing narratives of AI and previous cycle narrative of layer 2 on Ethereum. So like a Bitcoin layer 2 narrative. We saw BRC20s coming through as well recently, which was, I guess, part of this.
So layer 2 and 3 development is hot right now. Like I mentioned, Saylor endorsed Lightning, but there are others. And I was speaking to other people about development on the base layer, and I think that's before the development of NFTs and other application smart contracts were more or less relegated to Ethereum and other protocols, but we're seeing that come back to Bitcoin. I think that is because the Taproot upgrade that we've seen last year, that came in late last year, allowed that to happen, and so a lot more development activity is going back into Bitcoin.
All right, so shifting gears, thinking back to maybe some of the Kitco stuff you did, I want to get into the people that you've interviewed. Any that come to light that memorable, that have really stuck with you, for the reason being that the information they gave was just so valuable. So something that has really changed the way you think about the markets.
Changed the way I thought about the markets. It's a very good question.
So you came from a background of university, going into finance and those sort of things, and you have this way of thinking, which is what we're being taught. And then you get into the space of working in the industry, and you go, oh, hang on a minute, that's not the way we were taught. Like, how is it so different in the actual world?
Yeah, well, I kind of I learned that the theories don't really apply in the real world in my first job, actually before Kitco, because I was working in macro research and I didn't use any. Well, not to say any, but most of the theories we studied in school were just that. They were theories. They weren't applied. The interesting
University,
people
a waste of time. All right.
well, okay, so no. So finance in university trains you to think and trains you to do research and understanding the theories. The understanding of theories is important because you're training yourself to think critically about certain issues and apply those the same level of thinking to other forms of analyses. So, for example, if you're studying, let's say, the efficient market hypothesis, and I talked to a Nobel laureate, Eugene Fama, about this hypothesis because he was the one that coined this term. You know, it doesn't. Most people think that most fund managers think that it doesn't work. So yeah, Eugene Fama, I would say, is probably somebody who was very, very, very interesting. I mean, there were a lot of interesting people, but let's just take him for example. I spoke to him
Yes.
once. I spoke to him once on my own show last month, and his theory is that markets are efficient, which is to say that the price of the asset or the market overall factors in all publicly available information. And so, taking that theory and extending that, it really means that a fund manager can't consistently can't consistently beat the markets over the long term. And the only way that they can do that is if they're I asked you, Dr. Fama, I said, so if somebody were to beat the markets, how would they do it? And he said that that person would have to have a superior sense of foresight and make very accurate calls on economics and the markets, which most people can't do consistently. But anybody who is able to beat the markets consistently also has almost 20/20 vision into the future, which is very, very rare. And so his theory is that you can't beat markets consistently. His research indicates that you can't beat markets consistently. And the data that he's looked at indicates that people who do beat the markets just got lucky a few times and they're not able to do it consistently. I said, well, there's plenty of people that have beaten the markets and have done very well. And if they were to present themselves to you and say, here's my track record, what would you say? I said, I'll follow your work for another 20 years and see if you can still consistently beat the markets for another 20 years. So that that made me think, why am I interviewing fund managers then? Let's suppose his theory is correct. Why am I interviewing fund managers about their views if everyone is just, in his views, lucky? Now, obviously, that's just his viewpoint. Many people disagree with him, but that was interesting to observe. Another interesting note about that theory is that it was ironic because I took the CFA level 1, and it was in the curriculum, which is ironic because you study the efficient market hypothesis. Most people who do the CFA want to be practitioners or finance themselves, either be a fund manager or work for a fund. And so you're studying this theory, which basically tells you that this test is going to be useless for you in the future. But anyway, you had to learn
it. Was he not presented with one that comes to the top of the mind? I think people would look at Warren Buffett, or they would look at Peter Lynch.
Yeah.
What was he doing? 29% per annum over the last 20 years or 15 years or thereabouts through the 80s, 90s?
Yeah, and I think Warren Buffett did publicly denounce the efficient market hypothesis because he's like, well, I'm living proof that it obviously markets are not always efficient. And I think Fama's response to that would be, well, that's a claim. Where's your evidence that his performance was not because of luck and because of skill? So we have to differentiate between luck and skill. And even Warren Buffett, someone who's had the best track record on the planet, how do we prove definitively with statistics that it wasn't just luck and skill? And I think a lot of people would say that, well, Warren Buffett is one of the people that just has better foresight, and his analysis is able to give him better predictions into what the company is going to do. But yeah.
Has he ever read
Warren Buffett?
What's that? Most people can't beat Warren.
Yeah, most people will never be Warren Buffett.
Over that period of 50 or 60 years, whatever he's been going for.
Right.
Has he read any of? Well, probably hasn't. But Jack Schwager, have you interviewed Jack? I always get his last name.
That is on my list.
Schwager.
That is on my list of people. Yeah. I haven't interviewed Jack. And Jack, yeah, he's written a number of books with very interesting trade. I have talked to Jason Shapiro, who was featured in one of Jack Schwager's books. Very interesting guy, Jason Shapiro. He makes calls that other people would consider contrarian. For instance, he agrees with market bulls that the market is going to continue going up and the rally won't stop until this fear of a recession is going to subside. But I haven't interviewed Jack Schwager myself. No.
Similar to the discussion that we had on your channel just recently. So you guys can go
Yes.
over
Yeah.
to David Lin and check out the
Yeah.
discussion that we had over there. You know, the bull market is on. Yeah, that would be pretty interesting. And if you can get him on the channel, that would be absolutely amazing because he's been going for about 40 years interviewing dozens and dozens of traders and investors across technicals and fundamentals. And he's got the data there. Leads me to some of the stuff we were talking about beforehand. So let's see if we can get into this because this is the interesting stuff. This is the stuff that could potentially get David Lin cancelled from the internet. Gold. I needed something for the title. Gold bugs. You're at Kitco. That was the gold bug space. Why are they so interested in gold? Can we talk about that? Can we talk about gold companies that come on? Can we talk about anything in that realm of what goes on behind the scenes of gold companies and why they come out to give presentations over and over again, like altcoin markets, like altcoin companies?
All right. So you asked a number of questions there. Let's talk about the last question. So why gold companies give presentations? Well, I mean, that's why do any companies give presentations? To sell their company. It's not. I don't think gold companies are unique in that sense. I've been to a lot of trade shows that were mining focused, and there are a lot of junior miners for gold and silver and other base metals. And it's always interesting how you walk down the aisle and every single booth that says we've got the best deposit on earth or something along those lines. And of course, not everybody has the best deposit on earth. That's not, but you get where I'm saying. Do your own due diligence. Don't buy something just because someone on the media tells you to buy it. A lot of the interviews are sponsored, and as part of the media, you're supposed to disclose that they're sponsored interviews. Some people don't. I make a point to do that. But yeah, some of these interviews are sponsored, and you have to be aware that everyone's trying to sell their company. There's nothing wrong with selling your company. That happens in every industry. And to your point about why gold companies present, well, I mean, they're there to present their company to the public. That's pretty much it.
Have you seen anything? What's the dodgiest thing you've seen? If you're allowed to talk about it, I can understand if you're not. But the dodgiest thing you've seen come across your desk where you've had to interview them and then later on found out, whoops.
That's never happened with a gold company. I mean, I've had guests that I've booked. I'm not going to name names that I've either looked up myself or other people have presented to me as an idea.
In commodities or crypto?
This would be like people who claim to be economists. They're just fake gurus. People who have been pitched to me, and I look them up, and they're fake gurus, or they've spent their whole life lying to people or scamming people. People with a bad history, and sometimes they hide that history quite well. Or people.
Are you naming Harry Dent here?
No, I'm not. I'm not.
That's my dig at Harry Dent. He's called the last 20 recessions. Sorry, go on.
Yeah,
that's me.
Well,
me.
To my knowledge, Harry Dent is not a scammer in the sense that okay, there's a difference. I mean, just because your calls aren't always right, it doesn't mean you're scamming people. A scammer would be people who sell overpriced courses and not promising to deliver on a particular product. People who rug pull in the crypto space. People who have projects that don't exist. Gold miners who have projects that don't have any deposits and they're just straight up lying. That's happened. But that happens within any industry. There's always scammers. There's always going to be rug pulls. And as the media, you have the responsibility to do your due diligence before you present these companies. Even if they pay you to do so, you have to. You can't do it. And a lot of people in the media space take the money and they do it anyway. And then later on, they take down the videos when the projects go to zero. And that's just unfortunate. Sometimes it happens, and then you can say, well, there's projects like FTX. How would you know FTX collapsed? I interviewed Sam Beckman-Fried. Did I know he was a fraud at the time? No. Right? Am I responsible for promoting him? Yes. It happens.
Yeah. Same, I guess, with Celsius, Voyager.
Celsius, I interviewed Alex Mashinsky. Do we know that his company is going to fail at the time? I mean, I asked him about his finances. I said, look, some people, not me, this is an opinion, that some people think that the way you're generating yields doesn't make sense. How would you respond to the allegation that your company is a scam? I think I used those words, and he explained very clearly how it wasn't. And he also said that big funds like the Quebec, it's called the Caisse de Dépôt of Quebec, which is like the Quebec Pension Fund, probably the biggest fund in Canada, publicly managed fund, invested in his company. And they're a bunch of smart people. So I'm not saying they didn't do their due diligence, but but the risks of Celsius were hidden very well, right? So it's not something that's easy to uncover, especially if you're a big company. But the smaller companies, sometimes the sketchiness is a little bit more, a little bit more apparent.
Having interviewed a lot of these guys, and we've seen in crypto a lot of them go down. Three Arrow Capital. I don't know if you got to any of those guys that were in the crypto space, like the hedge fund
Yeah,
managers
I've heard
there.
of them. I never talked to them, but yeah, I know
Yeah.
about them.
Have you seen any similarities across personalities or things that they do that end up being I don't want to call it a scam, but basically like a project that fails, whether it's a mining company, a gold miner or a silver miner that fails, or a crypto
Mhm.
project that fails, or a crypto fund that fails. Is there any sort of similarities that people can look out for when they see these people speak? Are there any warning signals that you've now come across over the last few years, having interviewed these people yourself?
The only companies that have collapsed that I've interviewed that I can think of are Celsius that filed for bankruptcy and FTX that went bankrupt. Um, in terms of their financials, we're looking at after the fact hindsight. So it's 2020. There are obvious holes
Yes.
in their balance sheet that we can examine after the fact, but they weren't publicly traded, and so without this information, it was difficult to know. Smaller companies that I've interviewed, I've to my knowledge, they haven't gone bust. I have never interviewed a crypto project that has failed. I've interviewed miners, crypto miners, and crypto exchanges. I've interviewed several different exchanges. The only one exchange that I've interviewed that has failed was FTX, and I've only talked to Sam once. Um, but no, I don't think there are common red flags that are observable unless you have information to their financials, which most people don't for a private company, and that's what makes it very difficult.
But yeah, it was a bit more difficult with FTX, I think, especially with the price of their token always going up. That was
Mhm.
a bit of an interesting one. Celsius, I did not have a good feeling about Alex Mashinsky, and I remember talking about that. I mean, it was almost too good to be true, where you had this one person just saying, "We're going after the banks and we're going to take them down, and you have to come with us." It was kind of like that god personality, where it's like, it's us, come on board, we'll help you take them down. That was sort of,
Mhm.
to me, felt like a red flag about his personality and his intention of why he was doing what he was doing, as opposed to, I don't know, Coinbase or BlockFi, where they're like, well, look, this is our company, this is our model, you invest with us or not that we're going to be like emotional about it and tell you that we are with you and we are against the banks, like that sort of thing.
So a very eccentric leader who
Mm,
is a very good salesman might actually be, in fact, a red flag for you. That's interesting. Yeah, I haven't considered that, but I don't know if that's a commonality across all companies. I mean, Steve
true.
Jobs was the ultimate salesman, and I don't think Apple's defrauded anybody yet. So,
Yeah.
I mean, certainly that's a very interesting observation. I don't know if that can be applied to all industries or all companies. I mean, certainly the number one salesman of any company should be the CEO and the president. And if you, yeah, if he seems like a snake oil salesman, I'm not saying Alex Wood was. I'm not saying Steve Jobs was. But if somebody in general seems sketchy and seems like he's making up things, and your internal red flags are going off, you should probably look into it further. You see that in all industries. It's not just cryptos. It's not just gold. The smaller the company, the more likely, the higher the risk, because it's probably run by fewer people and 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 scrutiny less.
What is it
Mhm.
that we can see about gold miners that we should look out for if there are any sort of red flags? Why are a lot of gold miners just sort of average companies? They have a lot of equipment and stuff like that, but is there anything we can know about that? Am I sort of going nowhere with this? Tell me, David.
Well, there's two types of mining. There's production companies, and then there's early stage developers that are still exploring. So with the production companies, you're looking at the typically the mid tier and the large caps, Barrick, Newmont, Agnico, so on and so forth. And then they've got a steady stream of production. And then you've got to drill into their financials and see how much they're spending on production, uh, do a cost analysis on their margins, and jump on their earnings calls if you can, or listen in and see how they're doing and managing their costs and providing guidance. I mean, these are legit companies that have been operating for a very long time with a very good track record. with facilities like world-class facilities all around the world. Usually, they've got deposits spread out in multiple continents, and so these companies are probably the safest, in my view, of any of the gold mining companies. Certainly because of their size and their reputation and the strength of their balance sheets and financials. If you go down to the juniors, when they're in the exploration and discovery phase, then it becomes a lot more difficult to pick an investment. You've really got to be an expert, or at least trust the opinion of experts who know the management team. And or across the board, the consensus I've heard from experts who know the space is that you really have to know the management team on a personal and professional level. You have to trust them, and you have to pick a management team that has a good track record of actually delivering results. Because a lot of the time, you're working on a deposit and nothing really comes of it, either because the management team doesn't have the experience to find deposits or extract them, or can't really make deals to take it to the next level. Sometimes they're outright scams. I've heard from people that, I'm not saying all of them are, but this happens in every industry. I've heard from a friend who's a miner. He's jumped from one project to another, and I asked him, "Why are you jumping ship to another company?" Well, because the last one didn't have anything in the ground that they claimed they would, or they had. You wouldn't know unless you're a geologist or you visited the site. How could you know that, right?
It sounds like altcoins, right?
Pretty much, yeah. It happens in every industry. There's scams in every industry. So I'm not saying the entire industry is a scam. I'm just saying it's very difficult to know, going back to mining specifically, if a particular deposit is real or not, unless you are able to look at the technical reports and their drilling results. I'm not a geologist by background, so I can't tell you if what they're reporting is accurate. I have to visit the site. You have to talk to people who have visited the site.
Yeah. All right. It makes sense, and it very much sounds like the altcoin market, where if you don't understand who the team is, who is the CEO, like, do they have a track record? Do they just create these projects with a blueprint and then pump it out to the market, hoping for 100x? If you don't understand who they are, then like it's just a gamble at the end of the day, without understanding how to do that research behind the scenes, knowing the team, that sort of thing.
Well, it's less of a gamble if you know who the team is. Like I said, if you know that there is a strong management team behind that particular mining project, they've got a good track record, and they're located on a known, proven reserve belt, then your chances of success are automatically going to be higher.
No, that makes a lot of sense. And there's a lot of crossover and similarities. I know I keep coming back to crypto, but obviously that's what the audience is focused on here. But the similarities are so uncanny when it comes to, say, mining or juniors, more so. Juniors in the gold, potentially silver would be similar, I assume, to the altcoin market, where you just need to know how these companies work, what the management does, what marketing plan do they have, and are they able to execute on what they say they're going to execute on, or at least get it out of the ground and get that market to pump so you can get your 10x or 50x before flipping it over.
It's very difficult to know when the top is, right? So it's a good point. Yeah.
Take
that
a
is a
profit
good strategy in theory. That is a good strategy in theory, but yeah.
Is there anything big coming up on your calendar? Any interviews that you're super excited with that are coming up?
I mean, I've always got a good rotation of guests. I mean, I just had you on. You gave a very interesting presentation on your technical. So I don't know when this interview is coming out relative to mine. But
around
anyway,
the same time.
Yeah. Put the link down below to Jason's interview. We'll check that out. You gave a good presentation there. So I have a good mix of different people from different fields: crypto, TradFi, analysts, political experts, technical analysts like yourself, fundamental analysts. Next week, I'm going to interview somebody that isn't commonly featured on most financial media, I think, but it's Richard Wolff. He's a professor of economics, Harvard trained, and he takes a Marxist view of economics. And I'll be very interested to talk to him about why he thinks capitalism is failing, and why capitalism needs improvement, and how that compares to the Marxist viewpoint of the world. And I think I'll be asking him about the banking crisis and why that's possibly the fault of the system of capitalism itself. And I think that would be a very interesting conversation, not just because I think he's very smart, but because most people who follow spaces like mine or yours identify as business oriented and or capitalist in the sense
Sure.
that we value free markets and the capitalist way of thinking. But I think it's very important to understand the other point of view as well. So that should be an interesting conversation.
I think that's the beauty about your channel, and that's what I try and do on my channel as well, is to get people with opposing views so that you can see whether your ideologies or your theories stack up when put to the test rather than sitting in an echo chamber. So I think that's the fantastic thing about your channel. So if you guys haven't already, links are in the video description for David Lin. I hope to get him back on in the future, especially when the markets are getting a little more crazy, see what sort of guests he's had on. Maybe I'll leave it with one last one. I don't know if it's going to be too big of a question, but with the experience that you've got now from university and your time in the market and all these people that you've interviewed, what is your investment thesis? Like, what are you doing now, and what is your long-term outlook? High level, of course.
I mean, that's pretty simple for me. I interview bears and bulls. You just take the most extreme and you average it, and it's usually right.
yeah, we had
Look, I'll give you examples. Okay, so in 2020, when the pandemic hit, initially nobody knew what was going on. You had all sorts of market calls. Like you see the financial markets behavior radically in the first month of March. Stocks went down, I think, like 50% or something. And gold went down too. Supposedly the safe haven, down with gold, because as we know, during a fire sale, most things go down together. Ironically, real estate went up. But, a lot of people were calling for the end of the world. And on the other extreme, you have people saying that the Fed is about to initialize QE. We're going to get the biggest melt up of all time. What happened is we did get a big melt up. It wasn't, I don't know if it was the biggest of all time, but the people who did not fight the Fed won in their analysis. They looked at what the Federal Reserve was doing, which was injecting more money. Capital markets followed that. And the economy suffered the greatest, on paper, the greatest decline in GDP in any one quarter since the 1930s. It's 8.6% decline in real GDP in one quarter. 20, yet the stock markets rallied to new all-time highs shortly after. So the people calling for the end of the world, that they're going to get that the markets would collapse, those turned out to be incorrect calls. The people saying that the markets will rally forever, those turned out to be incorrect as well, because it didn't rally forever. We saw a big decline in 2021 or post 2021.
Yeah, 2022. That's right.
2022. So people who are usually right more in the middle have been, in my experience, a little more correct. The extreme views for journalists are great. They're interesting to talk about because theoretically they're engaging. They get good clicks because the headlines are engaging. They're not always.
Your titles are great. Your titles are great.
I don't make the titles. I just take what the people are saying. So I'm very lucky that way.
Hopefully, I gave you something to work with in our interview.
Yeah. So look, as a journalist, I love bold calls because they're interesting to talk about. For an investor, I think you should just take the average of the extremes and do your own research, and you'll be fine.
That's probably the best advice we could end with, because I don't think most people get that. Average those calls, the maxis and the maxis to the bears and the bulls. That was awesome. Thanks very much, mate. If you guys haven't already, links in the description. Love to get you back on the channel as well. I think that's it. Wrap it up, eh?
All right. Thanks very much for having me, Jason. It's a lot of fun. Take care.
Awesome. Thanks, David. Peace out, guys.